Welcome back to the deep dive. Today we are stripping down the Complete Fleet Driver Safety Insurance Program Guide 2026.
Yeah, it is. It's a really critical document for anyone managing vehicles right now.
Exactly. I mean, whether we've got 3 vans or 50 big rigs, you know that insurance premiums are just eating up your margins.
Absolutely.
And this guide claims you can slash those premiums by like 20 to 30%. But it also talks about avoiding nuclear verdicts, which sounds absolutely terrifying.
It should be. I mean, a nuclear verdict is industry speak for a lawsuit settlement that exceeds $10 million.
10 million. That doesn't just hurt a business.
No, it completely obliterates it. And the whole premise of this guide is that insurance carriers are terrified of these verdicts too.
Right.
So if you can prove you aren't a risk, they will actually pay you to be safe.
That makes total sense. They want to bet on a sure thing. And the guide suggests they do this by slotting you into one of 3 tiers based on your tech. Let's walk through those. What does the bottom realm look like?
So that would be the bronze tier. This is your basic GPS tracking.
Just monitoring the fundamentals.
Yeah, speeding, hard braking, things like that. It's better than nothing, and insurers will typically give you a 10 to 15% break for it because they know you at least watching.
15% is decent, but the guide seems to suggest that the silver tier is actually the smartest play. Why is that? Wouldn't you want the gold tier if you want the absolute most savings?
You might think so. Gold gets you up to 30% savings because it's the full ecosystem telematics cameras, MVR monitoring, and prescriptive training.
Wow.
But silver is the sweet spot for return on investment. Silver combines that GPS data with AI-powered dual-facing dash cameras. You still get up to 25% savings. But the real value is exoneration evidence.
Exoneration, that is a heavy word.
It is, but think about a typical accident scenario. A commercial truck and a sedan collide.
Oh.
Without video, the truck driver is almost always blamed by default.
Right, it's a he said, she said where the big guy loses.
Precisely. The camera changes all of that. Video evidence resolves claims 75% faster, and it actually cuts fraudulent payouts by up to 60%.
So it's basically an unmatched witness.
It really is. And the behavior changes are stark too. The guide highlights data from Responsible Fleet's AI cameras showing a 96% reduction in distracted driving.
96%.
Yeah, when drivers know the AI is watching their eyes, they put the phone down. They also improve following distance compliance by 76%.
Okay, so let's say I go out and buy these cameras. I plug them in. Do I just call my broker and ask for my discount?
If only it were that easy.
Yeah.
This is where most fleet managers fail. Buying the gadget isn't enough. You need a written policy that dictates exactly how you use the data.
And you have to set the sensitivity correctly right. The guide gets really into the weeds here on G-forces.
It does. For a Class 1 vehicle, so under 6,000 pounds, the rapid acceleration limit is 0.37 G, and harsh braking or turns sit right at 0.38 G.
To be honest, those numbers meant nothing to me. Is 0.37 G a lot?
It helps to visualize it. Imagine a full cup of coffee sitting on your dashboard. If you accelerate hard enough to spill that coffee, you probably triggered a 0.37 G event.
That is actually a pretty tight leash.
It is. And for heavier vehicles like a Class 5 box truck over 16,000 pounds, the limit is even lower at 0.28 G for acceleration.
Because that much weight takes longer to stop?
Exactly. The insurers need you to be even gentler. But the real secret sauce is that your policy has to prove you use this data for coaching, not just punishment.
Because if you just use the camera to fire people, you aren't fixing the risk.
And the underwriter knows that. You have to show your work. The guide recommends starting with weekly report reviews for the first 90 days before moving to monthly.
Looking at device health and driver scorecards.
Right. You are aiming for a fleet-wide green zone score of 850 or higher.
Is that a standard metric?
Think of the green zone score like a FICO credit score, but for driving behavior. 850 is excellent credit.
So you walk into a renewal meeting and show a graph where your fleet went from 600 to 850 over 6 months?
Undeniable proof of reduced liability.
The other metric that popped up was CSA scores. I know those are related to maintenance, but how does an oil change lower my insurance premium?
It is all connected.
Yeah.
CSA stands for Compliance Safety Accountability. It's basically the federal report card on your business.
Okay.
If you don't have digital records proving you do maintenance, you get hit with more violations during roadside inspections.
So bad maintenance leads to bad inspections, which ruins your CSA score.
Yes, and insurers look at that score before they even look at your application.
It's a total domino effect. Here's the big question then. If I implement the cameras, the policy, and the maintenance tracking today, when does the money actually show up?
You will likely get a 5 to 10% discount right away just for installing the system.
Our participation trophy.
Pretty much.
Yeah.
But those big 20 to 30% cuts, those take time. Usually need 6 to 12 months of documented data to prove the trend is real.
So it's a long-term play.
It is,
Yeah.
but there is a hidden immediate benefit. Retention. The guide notes that fleets using the gold tier see 57% better driver retention.
That seems totally counterintuitive. I would think drivers would hate being watched.
They hate being blamed for things they didn't do even more. When a system protects their commercial license from a false accusation, they stay loyal to the company that provided it.
That is a really powerful perspective. If you are looking to tighten up your operations, checking out a solution like Responsible Fleet GPS isn't just about tracking, it's about financial defense.
It is the difference between hoping you are safe and proving you are safe.
I will leave you all with this thought. We obsess over the return on investment for new marketing campaigns, but often completely ignore the massive liability of having our brand slapped on a 2-ton missile rolling down the highway. Imagine the growth you could unlock when that rolling risk becomes a documented asset. Thanks for listening to The Deep Dive.